The cost of buying a home seems to be on the rise again, with an unwelcome change for those looking to buy a property, at least for now. The average cost of buying a home in Australia rose 0.13% in March, and currently has a median value of $732,000. Housing prices have been falling since the central bank began its campaign to align inflation in May 2022, causing interest rates to rise for the 10th month in a row. National home prices reversed the downward trend as price declines eased. NCA Newswire Gaye Gerard capitals saw price increases throughout 2021 and parts of 2022. By contrast, Sydney's home prices fell 6.03% last year to an average of $994,000, according to the latest PropTrack Home Price Index, while Melbourne's saw a 5.79% drop and the median home value is now $789,000. However, there was a slight jump in prices in March. Sydney home prices rose 0.27%, Melbourne 0.12%, Perth 0.24% and Adelaide 0.1%. Brisbane, Hobart and Darwin prices opposed the trend, falling 0.06%, 0.43% and 0.1%, respectively. Rate hikes reduce the amount of money borrowers can buy, pushing prices down, while increased immigration, higher rent prices, and rising wages are pushing demand up. Fewer new listings also boosted values, according to PropTrack. So far this year, Sydney has seen the largest increase in values of all capital markets, with fewer homes supporting market home prices. In March, Melbourne home prices rose 0.12% amid a weak influx of new listings fueling competition among potential buyers. As a result, vendors benefited from less competition with other vendors. Brisbane house prices fell slightly in March after rising in January and February, although the flow of new listings remained soft. Perth home prices rose 0.24% in March, reaching a new price peak. According to PropTrack economist Eleanor Creagh, with inflation rates still well above RBA's 2 to 3% target and unemployment at relatively low levels, the bank may choose another cash rate hike. But there's a pause in cards. Concerns about inflation expectations remain constant, and the board's commitment to tackling high inflation makes a 25 bps increase next week more likely than nothing. However, this is a close decision, and whether the central bank pauses this month or next month, the end of interest rate increases is approaching. If RBA increases its cash rate by 25 bps next week, it will be the 11th consecutive hike, bringing cash rate to 3.85%, its highest level since April 2012. This will likely be point at which RBA pauses tightening cycle and assesses impact of tightening already applied. However, prices may still fall in the coming months, as the full impact of rate increases is felt by mortgage holders. This is particularly the case in this tightening cycle, as many borrowers are taking advantage of record low fixed-rate mortgages during the COVID period, but are not feeling full impact of rate increases, said Ms. Creagh. Therefore, consumer spending is expected to slow sharply in the coming months, as the lagged effect of rate increases is already in effect.